of the questions I get asked the most is, if I have extra money each month, should I pay off my mortgage early or should I invest it? Hi, I'm Simon Pitkin, Client Success Director at Hoxton Wealth. And today we're going to look into whether you should pay off your mortgage early or invest the extra cash. Having some extra cash is not a bad thing, okay? It's a good problem to have. It usually means you've managed your money well and you're now thinking about what's the next smartest step. We'll look at both sides. What happens when you pay down your mortgage faster and what happens when you invest instead. How your mortgage really works. Let's start with the mortgage. When you buy a house with a loan, you're borrowing money from the bank and paying it back each month plus interest. Each month, the payment has two parts. One part goes to repaying the capital. The other part is the interest, the cost of borrowing that money. Here's the thing most people don't realise. In the early years of your mortgage, most of the money goes to interest only, not the house. So even after years of payments, the amount you owe might not have gone down as much as you expect. That's because the bank takes its share of the interest first. Over time, that balance slowly shifts. Later in the loan, more of your payment starts going towards the actual debt. And that's when you really begin to see progress. That's why making extra payments early on can have such a big impact. Those overpayments go straight towards reducing what you owe, which means you pay less interest overall and finish the mortgage sooner. The case for investing instead. Now let's look at the other side. If you're invested, say, the same amount of money instead of paying off your mortgage, could it grow faster? Historically, global stock markets, for example, the S&P 500 in the US, have given long-term annualized returns of around 7 to 10% per year before tax, with ups and downs factored in. For mortgages, the interest rate actually depends heavily on where you are. In the UK, average fixed rate mortgage around 4.4%. In the US, the average 30-year fixed rate mortgage is around 6.2% as of November 2025. In the UAE, used Dubai as a reference, fixed mortgage rates for residential properties are typically 3.9 to 5% range. So you see, if you're paying 4% in one country, 6% in another, the decision can flip. If your mortgage rate's low, around, say, 3 to 5%, investing that extra money might give you a stronger long-term outcome. But if your rate's higher, the safe return from reducing debt becomes more attractive. Also remember, local tax rules, currency exposure, future plans, they all influence what makes sense in your case. When paying off your mortgage makes more sense. So when might it make more sense to pay your mortgage down? A few situations stand out. Your mortgage rate's high, say 6% or above. You're close to retirement and you want peace of mind. You don't like having debt hanging around, and you'll simply sleep better knowing your home is yours outright. You've already built your savings and investments, and you just want to reduce risk. For some people, that feeling of being debt-free is worth more than the potential investment gain, and that's perfectly fine. There's a lot of value of that peace of mind. When investing might make more sense. On the other hand, here's when investing might be the smarter move. Your mortgage rate's relatively low, 4% or less. You've got long-term to invest, say 15 to 20 years or more. You might already have an emergency fund and proper protection in place. You're comfortable with a bit of market movement and understanding that long-term investing is about patience. So if you have time on your hands, investing could grow your wealth faster than paying off that low-interest debt. A practical middle ground. Of course, this doesn't have to be all or nothing. Many people choose to do both. For example, you might put half of your spare money into investing, half into extra mortgage payments. That way, you're reducing debt and building wealth at the same time. If you're unsure of which route to take, you can run some simple comparisons. Online calculators can show how much interest you'd save by overpaying and how much money you might grow if invested over the same time. If you're an expat or own a property abroad, the right answer might depend on exchange rates, tax, future plans, so it's worth getting tailored advice before you act. So should you pay your mortgage off early or invest instead? Well, that depends on your rate, your timeline, and what gives you peace of mind. If your mortgage is expensive, paying it down is a sure way to save. If it's cheap and you have time for your investments to grow, the markets may reward you more. If you'd like help running the numbers or understanding what works best for your situation, click the link in the description box below, book a free call, and one of the team will be here to assist you. Thanks for watching.